Let's talk about all of this with some of our friends and colleagues at the American Institute for Economic Research, including Jason Sorens. He joins me. Jason, good to see you here. It's been some time. You and I have discussed a lot of these trade deals and tariff questions before. Is it just coincidental that a lot of these trade deals that are coming together and have been signed are in Southeast and East Asia? Is that purely coincidental?
I don't think so. I think these are important trade partners for the U.S. They're also important alternatives to China in terms of places where U.S. companies can invest and where U.S. companies can source a lot of their inputs and materials. So I think it makes sense the Trump administration is focused on the Philippines, Indonesia, Japan, and some of these other countries.
So if we can, let's just focus first on the Philippines and Indonesia. How much business do we, the United States, do with them? How impactful is this trade deal?
It's a fairly substantial amount of business. So the Philippines, for example, we import about $14 billion a year from them and export about $9 billion a year in goods to them. So it's a non-trivial amount of money. Certainly, the U.S. is a large economy, so as a share of the economy, it's it's a small share of GDP. However, every little bit helps in terms of settling a framework for trade, so that companies can have predictability about what's going to happen in terms of the costs that they have to face in their production process.
So what do you think China is thinking? We did, I have to remind the viewers, Scott Besson, Howard Lutnick, they were in London for those talks with the Chinese about getting a trade deal on the books. It was agreed to in principle. A framework was reached here. What is the Chinese thinking tonight about these?
Well, I think China sees this as a marker on the table where they probably can't get quite as good a deal as these countries, so it sort of sets a limit in terms of what they can negotiate. So 19% tariff on Indonesian and Philippine goods. That's actually, in the case of the Philippines, slightly higher than the tariff that was originally announced on Liberation Day. But right now, China's facing a tariff of 30%. So that kind of narrows down the range that they can look at. Now, of course, we don't know really the details in terms of what exemptions there might be, whether this applies to other goods like copper, aluminum, steel that have special tariffs, or pharmaceuticals that may have special tariffs imposed. So there's a lot that we still don't know. We also don't know how this applies to American goods. President Trump said that American goods will face zero tariffs going to the Philippines, but already the Philippines exempts 75% of American goods from tariffs altogether. So it's unclear whether, again, that applies to every good or most likely just a range of goods. So there's a lot still to be worked out here, but we're starting to see a framework come into place.
Yeah, because this August 1st deadline is fast approaching. Remember, that was the delay of the delay, or at least the extension of the delay after that 90-day period ended back on July the 9th. And so we'll have to wait and see whether or not more of these trade deals come together. I want to talk, though, about some of the tariff impacts, because you can make the argument that since Liberation Day, April the 2nd, the market has stabilized. We're not seeing many market impacts because of the tariffs. We have been hearing a lot from the Fed, including Chairman Jerome Powell, that they're being very cautious. They're treating the tariffs with kid gloves, meaning they don't want to raise or lower rates. So they want to wait and see. That's their approach that they're taking. And then we got this Wall Street Journal report today on the GM profits. And I want to read from the piece here. So GM said today, Jason, that new tariffs on imported cars and auto parts, it took a $1.1 billion bite out of its bottom line. The company reported net income shrank 35% in the second quarter as Trump's automotive tariffs weighed on the company. Now, GM is the largest automaker in the country by sales. It had already lowered its earlier profit guidance for 2025. Now, the company says greater impacts from tariffs are expected to hit the car maker in the third quarter as well, though it is maintaining its profit guidance for the full year. So shares of GM dropped in early trade on the news, falling nearly 7% by midday. So Jason, GM took a $1.1 billion hit to its profit in the second quarter because they say of the tariffs on automobiles, imported parts and cars here. So how should we interpret that? What does that spell for the Trump tariff regime?
Well, a lot of people don't realize how complex the auto industry is. So-called American car companies like GM actually produce many of their components abroad and many of their cars abroad and bring them to the U.S. So American-owned doesn't necessarily mean 100% American-produced. In fact, no car company produces 100% of their cars and all their components in the U.S. That would simply be completely unprofitable and expensive to do that. Car components, sub-assemblies, they can cross borders multiple times, and each time they're paying a tariff. Add to that the steel tariffs. Steel is an important component, obviously, in automobiles. So it's no surprise that the automobile industry is especially getting hit. I think what we're seeing is that a number of these tariffs are taking a while to kind of work their way through the system. Some companies tried to keep prices lower at the beginning, and that's hurt their profitability and hurt their stocks. But we're going to start to see more price increases in some of these industries that are more complex, like the auto industry, that have been especially hit by tariffs.
Okay, but Jason, I just have to know, because I've been talking to economists and analysts like yourself since April 2nd, since Liberation Day, about when are we going to see the impacts show up in any of this data on whether or not, prices will rise for consumers because of the tariffs. We haven't seen it really in these inflation numbers with the CPI report or the PCE reports. We haven't really seen it in the jobs numbers. We're seeing it there in one company's profit report for the second quarter. Will we see it elsewhere or no? Is this a one-off?
Yeah, so we are seeing it in terms of relative prices. So if you look at the prices of imported goods versus non-tradable goods, you are seeing a difference where imported goods have been rising in price. We've also seen that a lot of those tariffs that were announced on Liberation Day have been rolled back. But if you look at average tariff rates, they've been creeping up because the Trump administration keeps announcing new selective tariffs and some of these trade deals that nevertheless are higher tariffs than the 10%, right, that every country got when those Liberation Day tariffs were suspended. So we have been creeping up toward higher tariffs. That's delayed some of the impact. We are seeing it in relative prices. We're not seeing the general price level because the Fed has kept interest rates high. Yeah. So I think where we're seeing the impact of tariffs is in higher interest rates.
All right. Jason Sorens there with the American Institute for Economic Research. Jason, always good to see you. Talk soon.
Likewise. Thank you.